Welcome to today's video technical update presented by FX Times. It is Wednesday, January 27th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Again, I'll skip the euro dollar and the pound dollar pairs, as you can read up on these two at fxtimes.com. Instead, I'll go over the dollar Swiss franc, dollar Canadian dollar pair, and the euro yen pairs, all showing greenback and Japanese yen strength. This video is being produced at about 5:20 p.m. Eastern Time ahead of the Asian session. We'll start with the dollar Swiss franc pair. See, after this long decline here, the market is either in retracement or a start of a reversal. So this could be a ABC, or this could be 1, 2, and then start of a third wave. Okay. Now there should be some resistance here at 1.08, 1.07 area as it reaches this declining trend line and is a completion of a Gartley. That would be, you see here, with this swing, it's a retracement of 78.6%. With the higher level swing here, it's 50%, and this swing here is 38.2%. So there's some resistance here. And whether or not the market breaks this should tell us whether or not this is ABC or 1, 2, and third wave. So looking at the daily, so you see this is either ABC and then a continuing decline to retest this parity level, or it could be 1, 2, and break of this would indicate that this is a third wave for a rally. And looking back at the 4-hour time frame, I just want to check the wave structure of the lower time frame here. Now starting with the parity level where the market bounced from, see, we could have 1, 2, 3, 4, and a truncated fifth wave, ABC correction, 1, 2, 3, 4, and then this could be, if the market tops off here at 1.05, this could be the fifth wave, and then a correction might follow, and it could come in an ABC manner. This is just one possible scenario. This is just one projection, and that would test this rising trend line more or less. And if the market continues from there, it may hold this three-wave structure on the rally and two-wave structure on the decline. Then this is indicating that the market is in the bullish mode. However, I would still say that when the market reaches 1.07, if the market reaches 1.7, that's a very important area that would give us more clues again to whether this is C wave or the start of a wave 3. All right. Now, just allude to the momentum. That the daily shows bullish continuation. Weekly also shows bullish continuation. 4-hour time frame shows bearish divergence, so in the short term there may be some correction in the Asian European session. The next pair is the US dollar Canadian dollar pair. Here we're looking at the daily time frame, and we see the market attempting to break this declining trend line. The strength of this bullish action, it's strong, and we may be developing a double bottom if the market can break above the 1.08 1.09 area here. Okay, now if that breaks, then we have this projection, excuse me, this pattern breakout projection, excuse me, to go up to 1.15, and this is the next resistance area. Now going to lower time frame, in the 4-hour, because you see even in the daily time frame we see overbought levels, although it may be showing some continuation, but we need another day or two to establish that. Looking at the 4-hour time frame, we already see a divergence, bearish divergence, and price action looks to be exhausting. It's attempting to break above here 1.07, but here was rejected yesterday, but the market didn't break this rising trend line, so there was no indication of reversal. But today, again, there might be a second try for the market to hold off this rally, and there may be a correction, and if there is, the correction should be stalked to these at these retracement levels, specifically here at the 50%, as it would be coincident with these two moving averages. So if the market declines, pay attention at the 1.0450, 1.050 area. Finally, let's take a look at the Euro-Yen pair. Now, just to review, see the pair has been in ranging mode since early last year, and now the market's threatening to break below the support. Okay, it's already showing strong signs of break, and with this kind of strength in the market, it looks like it may break. But the momentum at the currently may have paused, but it's not reversing yet, so there's still a couple more sessions that we may need to monitor this situation, because although it's showing breakage of this support, it's still within the support zone. You see there was some breakage here, but it was cleared. It was a clear out. Yeah, so the support can come all the way down to 125 even. Now, if the market does show that kind of price action, that would be a clear out, and then if the market pushes the pair back into this range, we'll have to see if we could reestablish this support again, and if it does, then we have the next resistance here at 1.35 as our first target, and this 1.3850 area as a more liberal target as the range resistance here. So that's one scenario, which is the clear out scenario. Another scenario is that the market continues this swing all the way down to 122.50. Here, this is an important, this is 61.8% retracement, and also the 120, well here it's 161.8% extension of this rally here. So this is an important support area, and if the market continues to come down and reaches this area, we may anticipate some kind of pullback, this correction rally. And if this correction rally does top off here near the previous support, then we have established our break, or confirmed our break, and we may have another swing down to our previous support area here at 113.50. But before reaching 113.50, you see this 78.6% retracement at 118, 17, yeah, this around 118 area. So this is if the market is in a bearish mode, this is your two intermediate targets. And that wraps it up for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.